What's up, everybody? This is your mailbag here for October 9th, 2014. Quick kind of recap on the market here. I say that in sort of a laughing manner here because this shit is ridiculous. The market is up and down now 200 points, 300 points every single day. And it's getting quite rambunctious. Today, the SPY Today, most people came in assuming we were going to gap up and longs would start to work, considering how hyped up yesterday's move was. But apparently it was just short covering, all short covering. And we retraced all of it and then some today. So, I think SPY closed yesterday at like 197 and change, or maybe it was 196 and a half. Pre-market, we were at 197 on the SPY, and we closed today at freaking 192.80. Okay, that's where we freaking closed. So the ranges are absolutely ridiculous. They're burning people who are taking swing directionals both sides. It is a scalper's market right now, and you can kill it. You can kill it too on the scalp side, provided you're thinking like you're thinking as such. Any short covering rally that you see, you're kind of shorting into it. Anything that gets too excessive on the downside, you go for your small dips here and there. Banks started to sell off like crazy today into the close. Bank of America down to 1660. I think Citigroup had a horrible day. This Goldman Sachs is looking miserable every single day. So anybody who's trying to dip buy and go for the swing long here and time that move, a lot of people are sitting through some serious pain right now, and I'm honestly happy that I'm not losing my ass because, this would be a situation where I'd be down a considerable amount of money here. Okay, so let's take some questions here, and then we'll just talk about things going on in the Sang Lucci world as we close up. Aside from trading options and equity, what other markets would tape reading and price action apply to? We've gotten this question a lot. And again, like tape reading, you got to realize it's not an exact science here. It's just the understanding of the supply and demand. It's the understanding of all the players that are currently involved in your stock. So you're talking about market makers, you're talking about algos, you're talking about the HFT guys, you're talking about retail guys, you're talking about broker assisted trades with block trades and things like that. So any time where a situation like this occurs, or a market like that happens where you have many market participants, they all act sort of different ways. This is another form of tape reading. So any market that is, that is sort of highlighted by these people, you're going to get tape reading. Because, again, you're just analyzing price, analyzing the short-term movement, analyzing the players behind it to see if you can get a big picture read on where she's going to go, either in the short term or the longer term. So Forex, I would advise against it just because it's such a liquid market. If markets become like too liquid, so for example, if you're looking at SPY tape, you're still tape reading by gauging the flow of action, and whether like you can still watch a bounce and you can still see how heavy that bounce is. So if sellers just come right down or not even allow a bounce to really move higher, like we saw today with any attempt on the SPY, you would just get these quick algo little spikes up, and then boom, the selling would just start again, and you would see no buying activity in any of your sectors, in any of your individual names. So therefore, you can say, okay, I'm not seeing buying in any of these, in anything really. I'm going to go ahead and short all of these squeezes. That's a form of using tape reading to give you some kind of a analysis on that price action so that you can make money. Let's see. I saw in the chat you said someone was bidding up the options on GoPro heavy, but the stock dumped a couple points shortly after. Did that guy just get burnt, or could it have been a hedge? Well, this one I'll answer with the next one. There's a lot of GoPro questions today. Why does GoPro have such wild moves all the time? It's like someone is trying to play a game with the market. All right, so I mean, here's the thing with GoPro. With GoPro, you have a situation where there are a lot of players involved. You have a game where there are many retail traders trying to find an edge, and then subsequently you have an even greater presence by market makers. All right. So the market makers are now providing an options market that is extremely difficult to play. Why? Because so many people want that volatility. They want that bet. They want those bets. And because they want those bets, if GoPro makes a 10-point move down or up, well, the market maker is going to get hosed on this unless they play the game right, okay? Or unless, you know, certain things happen on the equity too. So you'll notice now, if you look on a GoPro chart, you'll notice that all the big moves down, they happen off the backs of a short squeeze. And then once that big move down happens, that's it. The volatility is cut off, and then all your put options just dwindle out in value. So you're talking about a very short time period where you're actually making money, but going long GoPro puts. And if you're not in at that time, you're going to miss the move. You're going to end up chasing and paying higher, which the market maker wants you to do. And that's the game that you're kind of playing here. Also, keep in mind that anyone who's going next week out or the week out or a month after that or whatever, all of these options are completely priced in. So even if you get a 10-point move down on GoPro, you know, you're not gonna make that much money. So it's almost not even worth it to play the options on an intraday basis or the swing basis unless you're just scalping and you're on point with your entries and exits. I would recommend even trading the equity right now. Okay, so absolutely, the games are being pulled out like crazy as far as the market making units on the options in GoPro. So be careful, guys. Anytime you see this thing about to collapse and it looks crazy, you're going to have to, guess what they're going to make you do? They're going to make you pay a 50-cent spread. You're going to buy on the offer, and there's going to be no follow through, and you're going to be that last jackass here buying 50 cents through the offer, and that bid is just going to collapse, and you're going to have to sell for 50% loss. Markets have had some incredibly wild trading sessions lately. Where do you think we go from here? Higher, lower, or more of the same crazy action? Well, again, any type of action it's not meant to continue, okay? It is not meant to continue. It is not meant to, you know, everything changes. Everything changes. So if right now we're in this sort of range trading day, and by the way, the SPY just tanked to the half, I believe. Yeah, 192.59 right now. So we might even gap lower, but who knows? This could just be after hours games. Anyways, you know, so once you have a period in time, by the way, when you have you know, periods of very tiny ranges, usually that means we're bullish. You know, we're bullish. You can swing long at these times. You know, there's not going to be much fear of the bottom dropping out and the SPY dumping 200 points or the Dow dumping 200 points on you. But now, when we're in this crazy range bound period, like, this is where the shakeouts happen. This is where all the juice happens. And the shitty part is the shorts are difficult. Shorts are very difficult. Why? Because you have the short squeezes, and the short squeezes are just intensified completely. So this range is going to continue maybe for a couple of weeks. We're in the sense that we have point ranges on the SPY all the time. Might even be more than that. But at some point, all of it stops, and we start sort of contracting the range again, and we move into some kind of trend, whether that's up or down. I don't know. Most people are saying on the upside. You know, for me, I still believe on the upside. However, it's getting even more and more difficult to prove that, especially through the price action. So it's more like a situation where you got to wait, stay light on your swings. If you're going long, make sure you hedge your book. If you have a long book, make sure you hedge that book. You know, so things like that. Big name techs have been hot lately, as have the financials. But what do you think the next sector to have a big move will be? I can't even tell you. Energies, maybe. Materials here. I don't know. I have no idea. Small caps, maybe. Earnings season is coming up. What are you expecting out of some of the bigger and more important names across the market? Earnings season could be the deciding factor of where this market decides to go. So if, for example, you know, most of the first week is going to be the banks, you know, so if the banks push out some good earnings and it's still floating around that interest rates are going to increase soon, you know, sometime in 2015, they could start a rally. If the banks do start a rally, then yeah, it could start smoothing out some of the volatility in the market, and therefore start bringing us back higher. To be honest, though, You know, as far as the earnings, I think now you're going to get very selective moves. So the whole market, let's say, might be bearish, but all of a sudden Twitter rips to freaking $70, even though the market is bearish and nobody wants to be in it. You know, you might get this Tesla still going higher. You might get a couple of names like just kind of still floating higher while the rest of the market is doing absolutely nothing. So earnings season combined with this volatility, it's going to create a lot of, I'll tell you what right now, it's going to create a shit ton of scalp opportunities. It's going to make things even more difficult to read during the day. So anybody who, again, is trying to put on a long swing here, catch the bottom of the market, which I know there's plenty of them out there, especially from holding overnight from yesterday, which is getting smoked in most of their trades. You know, be careful. Again, stay light. You know, just try to nibble at the bottoms there a little bit, and that's really it. That's all you want to do. Okay. As far as the shorts, anytime you get those squeezes, you know, there's plenty of opportunity out there to re-short those. All right, guys. So what's going on SangLucci.com? Again, we have the new Lucci method, which is up and up on the video library in the back end. Brian's class, I don't believe, has been introduced yet. You know, but we also have Market Structure Matters with Chaim Bodik as well. If you guys want to get a little bit of insight into, you know, the nitty gritty of market making, the nitty gritty of order types, the nitty gritty of order execution, which is cool for some of you advanced traders out there. We just came back from traders from For a Cause conference. They raised about $100,000. Shout out to Investors Live and the other board members from Traders for a Cause. It was pretty cool. It was pretty cool. They were all equity traders there. I mean, I'm the options guy. I was like the only options guy. You know, and most people didn't really trade the options, but they kind of live in the same world, so to speak, because a lot of them have you know, small 5K accounts and things like that. Chaim spoke as well on a lot of the order type controversy, and also the Click Fund, which is set up through Bulls on Wall Street. If you guys are interested in that, obviously, if you guys are equity traders too, check out Bulls on Wall Street. We're trying to get an options rig up as well, so obviously stay tuned for you know, news about that. All right, everybody. I'll see you next Thursday for the mailbag.